So let's talk about SoftBank. This is a company that's making one of the biggest, boldest bets you'll find anywhere in the corporate world. They've pushed all their chips in on one thing: artificial intelligence. Now, the huge question we're going to dig into today is, well, it's pretty simple, but the stakes are massive. After years of just wild volatility, is this enormous gamble on the AI revolution finally starting to pay off? And look, when I say they're all in, I mean it. This isn't just part of their strategy, this is their strategy, full stop. SoftBank has completely reinvented itself. They've sold off other businesses, they've narrowed their focus. Basically, they've become this one single-minded investment machine. And it's built to do just one thing: ride the wave of the AI revolution. Every single move they make now, it's all pointing right here. You know, this whole pivot, it didn't just happen overnight. It's been building for a while, and you can actually trace it alongside the big beats of the AI boom itself. Think about it. It really kicked off with the deep learning explosion way back in 2012. That kind of set the stage. Then, boom, 2016, SoftBank makes this monster move and buys the chip designer ARM. A year later, they launched the famous, or maybe infamous, Vision Fund 1. But the real rocket fuel? That came with the generative AI craze we've all been watching, which led them right to this huge new bet on OpenAI just this year. Okay, so that's the grand plan, right? The strategy on paper. But we all know strategy's one thing, results are something else entirely. And with SoftBank, you're talking about a company that has seen some truly eye-watering losses and, to be fair, some breathtaking gains. So the real question is this new laser focus on AI actually working? Is it leading to real steady growth? Well, there's only one way to find out. Let's get into the numbers from their latest Q1 results. All right, let's get into it. And right off the bat, what we're seeing is a pretty dramatic turnaround. I mean, the top-line numbers for this first quarter are something else. So what's the big headline number? Get this: a net profit of 421.8 billion yen. That's about $2.9 billion US dollars. And you have to remember, this is a company that was posting absolutely record-shattering losses not that long ago. So to see a number like this, well, it's a really big deal. But to really get a sense of just how massive this turnaround is, you've got to look back just 1 year, okay? Same quarter last year, SoftBank was in the red with a loss of over 174 billion yen. Fast forward to today, they're in the black with a profit of over 421 billion. So we're talking about a swing of almost 600 billion yen. That's like 4 billion US dollars. From a loss to a profit. It's just a huge, huge shift. So you're probably wondering, what's actually fueling all this? Well, a really key metric for SoftBank is something called net asset value, or NAV. The easiest way to think about it is it's the sticker price of everything the company owns. And that number, it shot up to 32.4 trillion yen. And SoftBank is being very clear about why. They say it's mostly because their AI-related holdings are just getting more and more valuable. And here's the thing that really points to some smart financial management. Even while they're making these gigantic new investments, their loan-to-value ratio, which is just their debt compared to all the stuff they own, has actually gotten better. It's down to just 17%. Now, they always said they'd keep it under 25%, so being this low, it signals a surprisingly healthy, disciplined balance sheet, especially for a company that's in such an aggressive growth mode. Okay, so the numbers look good, right? We've got profit, we've got rising asset values, we've got debt under control. But the big question is, how? How did they pull this off? Well, it really boils down to two key pillars that are holding this whole thing up. Let's break them down one by one. First up, we have the first pillar. And frankly, it's the most important one: ARM. Ever since SoftBank bought them back in 2016 and took them public in that huge IPO, this chip designer has become, without a doubt, the crown jewel of their entire portfolio. It's the engine powering so much of this good news. Now, if you look at ARM's revenue, the total number is up, which is great, but that's not the real story here. You have to look at where the money is coming from. Their license revenue, pretty flat. The magic? The real secret sauce is in their royalty revenue. That's up a whopping 25% from last year. And what that means is, for every single chip that gets made with ARM's tech inside it, more money flows back to them. That right there, that's the long-term profit engine. So, what's causing this big boom in royalties? It all comes down to a smart product strategy they call compute subsystems, or CSS. See, instead of just selling the basic blueprint for a chip, ARM is now bundling everything together. They're selling these pre-built, high-performance packages of their technology. For their customers, this is amazing. It slashes the time it takes to develop a new chip. And for ARM, well, it means they get to charge a much higher royalty rate. It's a win-win. And you can see it's really catching on. Just look at the adoption rate. It's accelerating fast. A year ago, they only had 7 contracts for these high-value CSS products. Today, that's more than doubled to 16. And you have to imagine what happens next. As these powerful new designs get baked into billions, and I mean billions of devices, from your phone to the biggest data centers, every single one of them is going to send a little more cash back to ARM, and by extension, back to SoftBank. Okay, on to the second pillar, the vision funds. Now, for years, this was the part of SoftBank that got all the headlines, and not always for the right reasons. It was volatile, it was heavily criticized, but the story we're seeing now is a bit different. It's a story of a major recovery, even if it's a little complicated. Yeah, and it's really important to get that this isn't just one simple story. It's really a tale of 2 very different funds. You've got Vision Fund 1, which, yeah, it had some very public flameouts, but overall, it's actually up a cumulative $27 billion. Pretty good. Then you have Vision Fund 2. It was launched into a tougher market, it had a much rougher go, and it's still in the hole by about $22 billion overall. But here's the key thing. The past isn't the whole picture. The really critical shift is what's happening right now. In just this one quarter, both of the funds made money, a lot of it. Vision Fund 1 raked in over $3.5 billion in gains, and even the struggling Vision Fund 2, it added another $1.4 billion. It really looks like the rising tide of this AI-driven market is finally starting to lift all of SoftBank's boats. And that's not all. There's even more potential just waiting in the wings. SoftBank says that the value of its private late-stage companies, the ones that are getting ready to go public, is sitting at a cool $45 billion. I mean, that's a massive pipeline of potential cash and future profits just waiting to be unlocked when these companies hit the stock market. So, let's recap. You've got a profitable quarter. You've got your 2 main engines, ARM and the Vision funds, both firing on all cylinders. So what do? Cash out and play it safe? Nope. Not SoftBank. They're doing the exact opposite. They are doubling down and heading into the next, even bigger phase of their AI bet. And what they're doing now is making a really clear statement about their ambition. They're not just investing in AI companies anymore. They're thinking bigger. They're moving to fund the very plumbing of the AI revolution itself. We're talking about the raw computing power, the massive data centers, all the foundational stuff that this whole new world is going to be built on. And if you need proof, here it is. The headline-grabbing plan to invest $30 billion into OpenAI. Let's be really clear here. This is not just another check from a venture capitalist. This is one of the largest corporate investments ever in history, and it's aimed squarely at building out that core AI infrastructure. It is the definition of an all-in bet. No question about it. And you don't have to take my word for it. They're spelling it out for us plain as day. There's this quote right in their Q1 report that says it all. They believe the future growth of the company, that net asset value we talked about, it's going to come from 2 main engines. On one side, you have the foundational chip designs from ARM. And on the other, you have the absolute frontier of AI research and infrastructure with OpenAI. So what's the bottom line here? It looks like SoftBank has survived the storm. They found a very clear, very focused path forward, and these early results, they look pretty good. But, and this is a big but, the sheer scale of their ambition is matched only by the mind-boggling scale of the risk they're taking. We're talking trillions of yen. We're talking technologies that will define our future, all on the line. So it leaves us with this one fascinating question. Is this all-in AI strategy going to make SoftBank the absolute center of the next tech era? Or will we look back on this as the single biggest, most audacious gamble in the history of business? Only time will tell, but you can bet we'll be watching.